All right, this is Kerry Artek with Artek Advisory, and this is an AgriTalk video supplement from Monday's show, Monday, March 1st. In Monday's show, March 1st, I cover three individual markets: May ethanol, April feeder cattle, and May cotton. Let's jump to ethanol. I really have one chart to show you in ethanol. This is kind of more of an update, really, because in the show in January I had mentioned how ethanol had elicited a long-term buy signal by having settled the week of January 4th above this 1.493 long-term channel top. This is a formation that did hold the October highs. We backed off nicely, came right back at it, and now we're in the midst of a longer-term buy signal that should yield 2.229 or wherever the extreme channel top is. And I'm going to consider this kind of a summer target. Could take longer, could take less. And in fact, in terms of the less, while 1.808, this channel top is a weekly chart, by the way. Just remember this is a weekly chart. By the way, all the charts I'm going to show you, with the exception of one, are weekly continuation charts. All of them are volume-based rollover. So, subsequent contracts will inherit, if you will, these price support and resistance levels. Presently, lead contract ethanol is May, and when we roll to the next month, it will inherit these price supports and resistance. And resistance in terms of 1.808 for the week of Monday, March 1st. This channel top has actually been holding buying pressures nicely for the last 3, 4, 5 weeks. The market's been tagging this channel top, backing off. From here, it could actually fall back to 1.493 over the next 3 to 5 weeks. I don't have a sell signal per se, but just know that this channel structure, which goes back to the March low, almost a full year long now, this channel structure. So, there's every reason to allow for the possibility of 1.493 into March, April. And from here, I would expect the market to bottom out and round back up. We could trade inside this channel structure well into this year. And that's why I say, September really is when this rising channel top merges with the targeted long-term channel top at 2.229. But if we happen to settle the week itself, this week above 1.808, or any week above this channel top, and by the way, I can apprise you of this channel structure through March. If you sign up for a free trial, certainly sign up for the newsletters themselves. I know I'm digressing a lot here, but I'm going to mention in the middle of my ethanol commentary, because I forgot to do it at the very top of this audio, that please go to artekadvisory.com, fill out the free trial form on the AgriTalk page. At the bottom of that page, you'll see a free trial form: first name, last name, email address, a phone number, preferably, and I'll get you set up on a 2-week no obligation free trial. I do offer a new 2-week free trial, if you haven't had one in the last 6 months. So if you've had one in 6 months, you'll have to wait or sign up for the newsletter itself. But in any event, let's go back to this analysis. If we happen to close any week above this 1.808 formation, which is rising on a weekly basis, next week, FYI, 1.820, then we have price acceleration, and I would expect to see 2.229 within about 2 to 3 months, where we can place an annual high for ethanol. Downside, I don't expect to see it this week, nor do I expect to see it between now and the summer target of 2.229. But if we did settle back below 1.493, good annual high. I'm not even prepared to tell you where or how far south the market will go from there. I'd take that on a week-by-week basis. But just know for right now, if we close back below 1.493 at the end of any week, that is a failed long-term buy signal. In essence, a valid sign of weakness over the midterm time horizon. So let's move on to feeder cattle. And this is the April contract. This formation, since the October lows, has been holding nicely. This is a 4-star support level in my newsletter. It can absorb selling through spring, and above which, still anticipating the mid-150s, 154.77 remains a 2 to 3 month objective, so long as we continue trading above 140.05, which is rising on a week-by-week basis. So that is the target. That is the basic longer-term outlook that I'm mentioning in my newsletters right now. But if we were to close this week, for instance, below this rising channel bottom at 140.05, and with big picture signals, I do like to see 1% violations. So closing at 138.65 or lower this Friday, April feeder cattle, the market has indicated a good longer term high. We should then, over the next several months, continue south into the very low 120s. So if we settle below this 140.65 by a 1% margin, 138.65 or lower on Friday, I don't think the floor is going to fall out dramatically and suddenly. I do think there'll be some consolidative get back and forth, but I do think between now and the end of spring, the low 120s in reach, this 120-157 formation, then able to contain selling through summer trade. But we're not there yet. With regard to feeder cattle, I'll just hold this image here. This market remains stable to bullish above 140.05 through spring, expecting 154.77 over the next few months. And finally, I do need to update you on cotton. Cotton had a big week last week. This formation here at the time in early to mid-September was in the mid-60s. When we settled above it in mid-September, I had mentioned the 92.20 formation as a realistic. At that time, I was saying 8 to 12 months. We got up there in 5 or 6 months. And so 92.20, this formation was tested last week, along with this descending speed line at 93.88. Now, this is a monthly chart. I do need to mention that. So this level, 92.20 up to 93.88, and this is May cotton right now. And when May rolls to the next month out, that contract will inherit these price resistance areas. 92.20, the beginning of a wide zone of long-term resistance up to 93.88 that I've been saying now for months that when tested can absorb annual buying pressures. And we tested this last week and we came off of it nicely. It doesn't look so much because this is a monthly bar chart, but if I jump to the weekly chart, you can see we nearly put out a key reversal high on the weekly chart alone. We did put out a key reversal high on the daily chart. So this development, having tested long-term resistance, I do think the coming weeks should continue south into the lower 80s. 80.54 to 81.34 rising weekly can absorb selling through spring, and from here the market can rotate back up into the lower 90s, the 92.20 to 93.88 region. But because this is an annual containment area and because it can contain buying through the year, I do think that the market ultimately, as the year goes by, will violate 80.54, and if so, I don't have it illustrated here, but mid-60s become the next objective. So, the truth is, holding below this 92.20 to 38 area, you should allow for the mid-60s as we continue into summer, fall of this year. And then that indication would be a settlement below 80.54. Let's talk upside. Even a weekly settlement above this 93.88 speed line in the midst of March, and you want to do that by a 1% margin once again. So you take 1% and add it to the 93.88. It should be around 94.81. I'm doing the math in my head, but I think so. 94.82, something along those lines. If we settle any Friday, 94.82 or higher, that is a violation of this long-term speed line by that 1% margin. And we are then in the grips of a secondary long-term buy signal that should reach into the mid-130s over the next full year of trade, possibly as far north as the mid-150s. This would be the zone, this would be the target. And I think, whether that takes 3 to 5 months or 18 months is anybody's guess, but just know that closing the week above 93.88 by a 1% margin is a significant long-term buy signal. Until then, cotton is showing a very toppy process right now, and I think likely to test the low 80s over the next 3 to 5 weeks, and more than likely the mid-60s as we continue into later year. And that is all I have for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.